Welcome to my channel today, where I'm to discuss no stop loss forex trading strategy. I became successful forex trader when I discovered how to trade without stop loss. Come to think of it, is this actually called stop loss? Not at all. This is called stop further loss. Once you place your trade, you're on the loss, and the market may go against you temporarily. And out of fear or lack of proper plan, you say, oh, please, once the market gets here, stop me. So that thing is not called stop loss, it's called stop further loss. In fact, that's one of the biggest lie in the industry. That is one of the deceit in the industry, because they will tell you you have a way of protecting your money. Press the button and it will take you out of the market. Is that the best way to protect your money? No. Rather, understand the market, what the market is saying, and you better protect your money. When the market is not speaking the language you understand, you don't trade, or you don't be part of the trade. But once you understand the chart, you trade. So you are lucky. Among all my strategies, this is my best strategy, trading without stop loss. For years, to be candid, more than 10 years now, I've never traded with stop loss. The stop loss is built into the trading strategy. What is the content of this strategy I'm talking of? You must master the behavior, the pattern of one or two, three pairs. If you don't understand the language, the body movement of that pair or the pairs you want to trade this strategy with, you can never succeed. Like I master Euro USD, JPP USD, and GBP USD, and the gold. These three pairs are in my fingertips. I understand them very well. I know the formation that they obey more than others. You must know these things. Then the next thing is that you must master the language of the chart. Every successful trader knows what the chart is saying. Mastered, no matter the indicator you are using. In fact, those indicators follow the lag. It's what the chart does, they do. So, understanding the chart, the candlestick pattern, the chart pattern, that is the beginning of your success as a forex trader. Then the third thing is one direction. I trade one direction. Any pair I want to trade, to avoid confusion, at that particular period, you will trade one direction of the trade. Then the next one is a lot size. My lot size is built into the chart pattern, for instance, or into the strategy. For instance, if I have a $1,000 account and I want to trade one lot size, which is very high, the risk is high at that point. What do? I will trade 0.2 at the first instance. Then when the market goes in my direction, I may increase the lot size. If it goes against me and gotten to a particular range where I want it, I will trade 0.3. Now you see, my total lot size is 0.1, but I'm splitting it in my trade. That is how I built this in my trading strategy. If I put in the one lot size immediately, I've given all my arsenals and I will not have anything to trade. And once the market goes against me, I will not have a point to exit the market, or I will not be comfortable to exit the market. And that's where you see stubbornness causes the loss of fund in the market. So if you want to trade this strategy, your lot size must be, you must split it. Learn how to split your lot size. Now, without further ado, let me go to the chart and show you how this thing works. I trade plain chart. Now, from my trading strategy, I say this strategy will just stop loss. I know that in a month, Euro USD usually travel between 0 to 500 pips. That is between 0, the maximum it goes usually is 500, minimum 300 pips. That is what it does. So when I come to the chart, what I do is I define the closest support and resistance. For instance, on this chart now, this is my closest support. established support, and this is my closest established uh, resistance. Now, the next thing I do is I determine the date. I place this. Good. This is April. This is April. Okay, this is 1st May. This is May. Fine. And this is June. 1st May to 1st June. Let's see what range did it travel. So what I do is I pick it from my closest support. This is my closest support. And today, now, fine. This is 283 pips. 283 pips. Now, if you stretch it to this, you see we are talking about 360 something pips, which I told you that maximum is about 500 and minimum is 300. It travels. So what I do is, okay, since it is approaching the 300 pips in this pair, see what I will do. I will split this movement into 4 places. Fine. I will split the whole movement into 4 places. Fine. This is the center of this movement here. So this is already in a bot section. This is the bot side, and this is the yes. This is the bot size, and this is the sales zone. Yes, the sales zone and the buy zone. Are you getting it? This is the buy zone. This is the sell zone. So this market is in my sales is in the sell zone. But how far is it from this major resistance? Now, that is what I will do. Since I told you, I trade range. It is called a range trading. So at this point now, I can sell from this point. Remember, it's a zone trading. When I split this movement into 2, you can see I splitted it into 2. This is my buy zone, this is my sell zone. So once the price enters this zone, I will sell. Once the price enters this zone is a zone trading, I will sell. But before I sell, the candlestick, the sell candlestick must form and confirmed, because as you see here, it is at the sell zone, but I've not seen anything to sell. This is where it's formed a, let me bold it. This is where it formed a bearish engulfing pattern for selling, but it has not entered the main zone, so I will not sell here. Are you getting it? I will not sell. So I will allow the price to enter the zone. Now, when it enters the zone, remember I have $1,000 account and I want to trade 1 lot size or 0.5 lot size. What I will trade is here I will trade 0.05 at this range. In the price within this range, I will trade 0.05. Not only that the price has gotten to this range will trigger the sell. No, there is a language I speak, I understand mainly. If it forms a bearish engulfing pattern at this range or dark cloud cover at this range, I would definitely sell. If it doesn't form, if it doesn't form such language here, I will allow the market to move to where it's going and forms the language I understand very well. I tread like the lions. I tread like the crocodile. I don't, I'm not fast to trade. No, I take my time, even if it takes 3, 4, 5 days for the price to get to this point and form a formation that I want, then that is what I will trade. There are languages the chart speak, but the major language I understand well is the dark cloud cover and bullish or engulfing pattern. So once these patterns form in a range or in a zone where I'm comfortable with, I will sell or buy without a stop loss. Do you see how it works? So you split your chart into 4 or into buy and sell zone. Now, once it enters your zone and form a reason to sell or buy, now you strike. But because you are not using stop loss, you don't use all the supposed lot size. Rather, you split it into 3. If you want to trade 0.6, you can trade 0.2 here, then target 0.3 here, then and target 0.1 at the most, so that when the market is coming, it will just come to your direction. In this case, you must understand how the chart, you must understand that chart pair, and you must understand the language that it speaks that never fail. Euro USD, once a bearish engulfing pattern forms or bullish engulfing pattern forms and confirmed, it moves in that direction. Dark cloud cover forms and confirmed, it moves in that direction. So with this strategy, you can comfortably trade your Forex without stop loss. Hope you understand. Please subscribe to my channel, share as we share, as we grow this community. Thank you for watching.